Good morning, traders. It's 8:02 a.m. on Monday, the 22nd of November, 2021. Happy Monday. Just came across the wire as I tweeted. U.S. President Biden has nominated Fed's Chair Powell for chairman of the Fed again, and nominated Brainerd as the vice president. The market's been anticipating this announcement for about 5 days now. So that's where we are. Again, this is episode 2121. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Few things, of course, right off the screen here, this Fed's chair question mark just got answered this morning. But this morning, the market's generally mixed. We actually started to take a bid here in the NASDAQ, the S&P, showing a small pop on the Fed's chair announcement. Still a mixed market overall. We can see Europe's lower. The main headlines are Eurozone unrest. So there have been riots in Rotterdam, in the Netherlands, and other places. There is some positive news. Supply chain improvement. The supply chain and shipping, container shipping, have seen quite an improvement, mainly due to lower U.S. demand and the ability of shippers to actually get containers delivered. Still a huge backlog. Still record backlogs and prices. And then, of course, ahead of us, we still have the U.S. budget and debt ceiling issue that's going to have to be dealt with. Remember that this week is Thanksgiving week here. It's a holiday week this week. A lot of schools are closed starting today through the week for a lot of people. So we may see a slowing market. Traditionally, we see a slowing market. The actual holidays on Thursday. And as we're sitting here, I'm just going to give you the schedule for the CME Group products. The other exchanges are very similar. On Wednesday, we have a regular trading session, and then on Thursday we close at 12 p.m. Central, 1 p.m. Eastern. That'll be the close on Thursday. There will not be a trader bite on Thursday. On Friday, we close at 12:15 p.m. Central Time, 1:15 p.m. Eastern. Again, on Friday, I will not be here. Taking a break and expecting to not be here on Friday. And no trader bite. Wednesday, maybe unfortunately for you, my trader bite is going to be done from home while I watch my 3.5-year-old. And some of you may or may not know that my wife and I are expecting a baby girl here starting this week through December 10th, anytime soon. And that may result in me being absent for about a week once that happens. So just a heads up, I didn't fall off the face of the planet. It's simply that we're having a baby and I'll be gone for about a week, as sleep will be at a premium, and I'm not going to get up as I usually do, at 5 a.m. to be prepared for the trader bite at 8 a.m. Central. So just know that that's the case. We'll, the guys at EdgeClear will tweet about it. The guys at Convergent will tweet about the team at Convergent will tweet about it, just to let everybody know. But I just wanted to give you a heads up on that. The S&P has traded 170,000. It was at 145,000 before the announcement. The overnight inventory in the S&P is 100% long. We've traded 100% of the volume above settlement. Above settlement, we've got 21.5 points of range so far, with a point of control at 47.08 quarter. So we've moved the overnight point of control higher to 47.08. It was stuck at 46.90 for a while. We'll go over what's going on Friday, but overall, the range, the volume are quite normal. The inventory is quite high. What's up for today? Well, we have consumer confidence at 10 Eastern out of the Eurozone. We get existing home sales, which the market is anticipating here at 10 o'clock Eastern as well. And then from there, we do have some Australian manufacturing PMI services PMI numbers. And then the Biden speech. I'm not sure if this, I couldn't find a time. If anybody knows what this Biden speech is, I'm happy to announce it if you tell me, but I don't know if this is the 9 a.m. Eastern announcement of the Fed's chair, if there's another speech going on. It's on the calendar, but they don't show a time. So that's that. I know I said I'm not going to do this, but I just want to spend just a minute to highlight scenario 2. We were looking for 15 to be tested on scenario 2 and a push to 90 and potentially 85 and worst case 80 on Friday. Here's what actually happened. So this looks like a terrible mess here, but it really isn't. We had an open, we dropped, pushed back up, and then we squeaked back into the VWAP in mid, and we finally busted out above the 4705 high of the prior session. The 4707 you see there, that was the prior week's high last Friday. So it was a week ago high, 4707. We're still looking for 15 up here. 15 is the target to the upside. And then it just gets murky. It gets ugly here. It was tough to hold on to anything during this period. Lots of scalping opportunity, I guess. And then it finally pushes towards the IB high. So we're looking for the IB stat. And it sets up a breakout trade into 47.14 1/4. So we miss the 15 by 3 ticks. And that's all she wrote, which was expected. This was scenario 2. We expected it to just dry up in the 15 area. If not, then it might continue to the 20. But it dries up and it immediately drops, creating what I believe to be an excess high. If you look at that volume at the high, it created an excess high. So Friday, if left alone, Friday actually created a very clear failure by buyers to hold these high prices. Friday's close was quite weak because we hit the 15, which was a significant measured move. It's a multiple measured move. But we went neutral on Friday by taking out the initial bounce low there. The initial bounce low being 91.50. We went to 90, which was the overnight point of control, and it's a high volume node. As you can see here, these are Friday's numbers, the overnight point of control and a high volume node. And then it pulls back to VWAP and it ends up putting in this channel to the downside, and it doesn't look like there's much of an excess on the low. So in a normal environment, if the market had continued trading, like if this was Thursday, Monday, Tuesday, whatever, where Friday didn't close and then the market's completely closed until Sunday, in a normal environment, I would expect the market to push down to 46.80. 46.80 would have been the target to the downside, and this would have been a very solid reversal signal, looking for a follow through the next day, a break of 46.90. But that's been disrupted as we come in to today. This is a 30-minute chart. You could see we open and we immediately push up, and we've been grinding up ahead of the full session VWAP the entire session. We've had a pullback again, a nice little market structure high bar there, a pin bar, and turning down to into the middle of the range of Friday, and now popping higher with this Fed's Powell. Some uncertainty has been removed from the market, and so positions are being taken to the positive side. But really, on Friday, the expectation is this would carry into at least 46.80 down here. And so it brings us into a market that is a little bit murky this morning. I classified this as a multi-distribution profile, but really it's looking more like a balanced profile. We were trading on top of the overnight point of control and full session VWAP. Full session VWAP and the overnight point of control are in the same spot. That is a strong indication of balance with the mid in the area. And here we are trading at 47.13 currently, 47.13.50. I don't like the way this is set up, but also the high overnight was pretty weak. It's you could see that the volume kind of drops off very quickly. You got these ledges, despite this wick at the top. We've got these ledges, and we have come back and filled in a bit of that wick again by pushing back up on this bar to a high of 16 versus 1675. So if this were in excess, we would not be at these prices. Maybe it'll put in a higher or lower high and turn over, but overall, I'm going to keep my hands off this morning and let the market decide what it wants to do, because we're near all-time highs and it's looking kind of murky this morning. So just a heads up on that. The delta is positive-ish, but not all that great. One thing I wanted to show you, here's this is the composite chart. Look at how we are decelerating. So a lot of people, I hear from a lot of traders, and a lot of people have been talking about how tough it has been since October, and they don't know why. If you look at the ranges and the way this has traded into the end of September, okay, so October started with this black box right here. The black box, the color of the box changes when the month changes, but each box represents 1 week. So the background's being painted to represent what happened in each box for the week, and the color change of the box is a change in the month. Just flips between dark gray, very dark gray, and light gray, right? So we create this base, this rounded bottom, and really it's been quite a grind from this point forward, from the gap that we left behind down below forward. Watch how the weekly ranges condense. Look at that. Just getting tighter and tighter, and then we get this little bit of flow right in the first week of November. But last week we had an inside week, and then 2 weeks ago we had an inside week, and last week we pushed highs to 47.14 and a quarter. But look at how tight that range is. And we're seeing the same thing in a Russell, where the Russell's just been trading inside of the prior day consistently. The NASDAQ, although pushing all-time highs, also is doing the same thing. So I did a webinar, I don't know when, maybe earlier this year, for Futures IO called Is It Me? Maybe it was for Convergent. Is it me or is it the market? In this situation, it's the market. The market regime is a rally regime which compresses volatility, range, drops volume. The signals become unclear. There's more noise in the market as many people jockey their positions. And so there's that. However, even though it's a market regime, we can't blame it for our performance entirely, because we get to respond to what that regime is and decide what we want to do with it, and not to give away too much. There are going to be losses guaranteed, but about the only thing you can guarantee is losses in the market. They're just a part of the nature of the market, but how much is really up to you. It's important to have some risk control in place. So just note the upside down, this kind of shooting star type of a candle. It's like an inverted hammer. This to me looked quite weak, and it pushed right back into the weekly point of control on what was a pretty balanced week. This looks like the high was made, but the buyers are having a really hard time gaining ground, gaining higher prices as they made that high. Okay, so I just wanted to point that out. Just understand that this is what's taking place. You can see the 20 SMA is catching up with price, and this is kind of rounding up, even though we're at all-time highs. We pushed all-time highs. I'm not impressed with how these highs are being made. Look at how these highs are being made when they are, and suddenly last week it's just been just a terrible grind. Just be aware. It doesn't mean you should be short. Doesn't mean the market's going to explode to the downside or whatever. Don't fantasize about what the market's likely to do. Just trade what's in front of you, but understand that it is really having a hard time pushing those higher prices. And so here's what we have. We still have some pretty good separation in the S&P. The S&P is holding quite bullish. The VWAP is flattening out, is plateauing a little bit, which means that as price is trading, it's trading, as the average volume comes in at price, it is not lifting the VWAP very well. So that could be the result of price being too close to improve the average very much, or it could also mean that volume is not that high on these 4-hour bars to move volume. In either case, we see it flattening out. We're through 2/3 of the month, or 3/4 of the month really, and 2/3, I guess. And we're going into a holiday. I'm expecting this thing to just start to peter out. I mean, it's got a nice little uptrend here, but I'm expecting this to peter out. You can see the Dow has just been really weak. The NASDAQ's been the strongest, and the Russell has been relatively weak. We talked about that. There's a lot of divergence between the Dow, RTY, against the NQ and the ES. Money's flowing into bigger caps, but the Dow is special in that it's price weighted. Look at what's going on with gold. Gold had some really good separation, but it's so quick to return to its VWAP. Now it's above 1800, which is pretty strong, but it's pushed up to 1875 and it just couldn't get through any farther. Anyway, this is taking a while, I know, but it's Monday. We want to make sure we're set up and seeing what's up for the week. And then the bonds tangled again in their VWAP, and the 10 years have tested from below but remain weak. This means that yields are likely are seeing upward pressure. Okay, Euro running away from its recent highs. The yen with the stimulus package had dropped, and now it's come back and it's dropping some more. Crude oil back at its target. Remember, I tweeted about crude oil very likely going back to 72 unadjusted from 2 expirations ago, but adjusted prices, 74.90, 74.96 was the target, and it got to 74.76 today. And I've been talking about this since it was up here in the 82-83 range. Nat gas falling off as well. So let's move on to what's expected for today. That gives you an overview. The other thing I wanted to talk about is what's ahead for the week. Now, the key number coming out today is existing home sales at 10 a.m. Then tomorrow we get the market composite PMI from France, Germany, the Eurozone, Great Britain, the U.S., and the U.S. manufacturing as well as services. Those are all going to be handled tomorrow between 3:15 Eastern and 9:45 a.m. Eastern. Wednesday, Germany gets its IFO business climate, a key figure. U.S. gets durable goods, new home sales, personal spending, personal income, and the FOMC minutes on Wednesday. Thursday is a holiday in the U.S., but Europe releases its German GfK consumer confidence at 2 a.m. Eastern. And that wraps up the week. So we've got some key numbers tomorrow and, today, just one. And then across Europe and the U.S., a bunch of market PMI numbers tomorrow. And then Wednesday, We have the FOMC minutes as well as new home sales and personal spending and income. So a lot to digest there. Let's take a look at what we've got for today. Let me just set up the chart here a minute. All right. Okay, so here we are. So, balanced overnight. This is skewed downwards on Friday. New all-time highs on Friday up to the 2350. The day session up to 14 and a quarter. We're sitting here at 47.11. The inventory is 100% long. The expectation is chop, a dip down, and then I'm looking for this to resume its take of the 15 and to start working itself up to the 20 that we talked about, up to the 20. And I'm expecting this to continue to drift towards 47.30 and a quarter. So 30 and a quarter is the next area, and then pull back. So it's relatively bullish going into the Thanksgiving holiday, which is also a seasonality actually. Secondary open auction tests up into the 15, unable. We get an impulse down. We may even get to the 20 up here. An impulse down back to the overnight point of control. Once it gives up the overnight point of control, though, I'm expecting it back at the prior settlement, the prior session settlement, which is down at 94.50. And then I'm looking for it to test that low from Friday at 46.90 here before the bounce. I would love to see scenario 2 because it's likely to be a mover. Given that it's Monday into a holiday week and so on, it's likely to be a grind. So be careful with your risk today. I know there was a lot to cover there, but there's a lot going on right now. Good luck, and I'll catch you tomorrow. And if you have not watched the webcast from last Thursday, please go to my Twitter feed, twitter.com/FuturesTrader71, and find the video and watch it. There's a lot of hints, tricks, tips on trading as a professional. It's gotten a lot of hits already, but I'm really trying to put out transparent content, and hopefully you can change the way you trade based on that. Good luck.